All right, everyone, welcome back for another episode of Carnivore Trade. Today's Friday, March 11th, 2022. So markets closing out the week here. On a weaker note, S&P down just under 1% right now. Triple Qs down 1.5. Dow actually managing to kind of hold the flat line here a little, just down 30 basis points. And the Russell 2000 finally having a weak day here. You can see the IWM fading out a little bit. That one has been showing strength lately, but today coming back in a little bit here. So last night I sent out a tweet about the volatility index, and vol was diverging again today. It just cracked positive here. You can see the VIX up 1.29%. VXX here just cracked positive in the last 20 minutes. But it was red all day again today, with the spiders down, just like it was yesterday. And so a little bit of what's going on here, at least I think, is you got everybody. We've talked about the chain, the spiders chain for next Friday. The put side is very loaded. We know that. And we may be getting to a point where everybody who wanted to buy puts has already bought. And now the thing is, the longer that the market doesn't essentially crash, so, we can go sideways. We can trade lower like we did today. We can even go down here and, mess around. But as long as the market doesn't crash, that really comes into play. And those hedges are going to have to be unwound. Or, if they're not hedges and they're bets, they're going to get closed. So that could be part of the reason why the VIX has come down, and it's kind of like a spiral, right? So the longer the VIX remains suppressed, the worse it gets with those hedges being unwound. So that could potentially be a reason why the VIX is out of contango. It was out of contango for the second day in a row today. I haven't checked it again. It may have slipped back a little bit with it going green here, but it did come back out of contango. So essentially what that means is that the market is kind of looking ahead and saying, okay, well, we might have 2% volatility right now, but in a month or 2 months, that might not be the case. In 5 months, that might not be the case. So market's kind of maybe calming down just a little bit. Again, the VIX, they did defend that 30 level, so it looks like we're going to close above 30 again on the VIX here. Been quite a number of days here that we've closed above 30 here. Looks like really since the 25th, we've closed above the 30 handle on the VIX. So again, lots of volatility in the market and expect big swings. Again, we have FOMC next week. The one thing that I do notice about today is that the volume is very light. Only 69 million shares traded on the SPY. We got 20 minutes into the close. So that's a really light volume day, especially with the market down 1%. Usually if you have a 1% down day, the volume is very heavy. And that's not the case. Again, 1% really isn't that much considering the VIX is above 30, but you get the idea. We also, obviously, I just said we have the FOMC next week. So it wouldn't surprise me if we just went sideways, and we burned out a lot of theta, at least until then. So until like Wednesday, Thursday, when we get the FOMC. So that's something on the table. Another thing that's on the table here, that correlation that I've been watching and telling you guys about every day here this week, that's still kind of in play. So here's the 17th. That would correlate to this candle here, which is today, obviously. Difference is we gapped up today. We did not gap up that day, and we flushed out pretty hard on the 17th there. And, we're flushing pretty hard intraday. If you actually look on the hourly, you can see it looks really kind of the same. Got big push down in the first hour, a little sideways action, and then a fade lower throughout the rest of the day. Same thing here. Push down in the morning, then kind of stalled out, and then you faded lower towards the afternoon. So that correlation's still alive. So here's your scenarios, really. I guess not scenarios. I mean, you'd expect if this correlation continues, 1, 2, 3 down Monday, Tuesday, Wednesday next week, and then an absolute flush on Thursday. If you take these trend lines here, or take this trend line here, I mean, that would take you right down to about 400 if we were to flush down there. So that would be a major area of support. Look at that gap there. That's never been backtested. We've never backtested that. So I was saying for a long time, like, we need to backtest 400. I was saying that way last year when we were blowing off to all-time highs. Obviously, we never got there, but we will. So, that could happen next week. The one thing I will say, though, and this is kind of like the bullish case, I guess. If you look at your MACD, you can see the same thing on the RSI. You're making higher lows here on the MACD, and you're making lower lows in price here. Now, well, that doesn't matter, right? We don't care about that. Well, it does kind of matter here, because if you look at again, the 17th, we gapped lower and then flushed. Today we gapped up and then reversed. So it does appear that momentum is declining a little bit. We did not take out this pivot low here. We took out, we got close to taking out this pivot low on the 17th. We didn't get anywhere near that today. So it looks like there is bearish momentum declining. That doesn't mean we can't have one more good flush, but I think that we're very close to some type of a low here, even if we do flush out next week ahead of the Fed. And I think the more oversold we get going into the Fed, the more likely it is that we rally after it. That's just kind of how things work, especially with OpEx in play. So that's kind of my thesis here going into next week. I know this chart's a little messy here with all the trend lines, but that's just what I wanted to point out there. Anyways, let's flip over. Let's go through some sectors here. So triple Qs again, weaker again. So that sector has been lagging. Again, yields were up a little bit today, or at least they're flattish today, but still elevated here. Let's look on the weekly here as we're about to close. So holding that 100 moving average for now. But again, you're still inside of this tail, so that's your positive there. But, not a really good look overall. Again, if you take these lows here, connect them, and if we flushed out, that would probably take you down to around the 310 area. And again, you've got a lot of support here. Previous all-time high, this pivot low, this kind of choppy range here. So there's a lot of support down here. That's why I don't think, even if we do get a flush, there's not that much more downside before you get a major bounce. And by a major bounce, I mean a sustained rally. We've been getting little bounces, but they've been faded almost immediately. So that's what I mean when I say a major bounce. But, in any case, we'll kind of just wait and see more. We're going into the weekend here. We could get news. This all could change Monday, for all we know. But in any case, that's what I'm looking at here. Tesla was a little weak today, kind of rolling over a bit. Still, holding on to this low here, but not a great candle there. Apple lower as well, coming down to test that 200 moving average. Microsoft and Google seem to be some of the stronger names here in the big tech space. But, overall, and Amazon actually held up okay, held most of those gains from yesterday. But coming back off that trend line there. So got all the way up to that trend line and now fading a little bit. And it's got a big gap to fill there too. So we'll watch for that next week. Anyways, semiconductors. Red again, the positive is you're still holding this green bar low here. You still got this gap here and you're not going to lose it on a weekly basis. So that's your positive there for the semiconductors. IGV, your positive is you're above double bottom. But again, a really weak look overall here for the triple Qs and pretty much most of tech. All right, so we talked about the Russell. So again, here's the Russell daily. Looks like he came up here and filled this gap. Was a little bit weaker today. Again, Russell has been strong, but today showing a little bit of weakness, down 1.5%. It's still holding up okay, relatively speaking. You do have a gap right here, though, from the 8th. So we'll see if that gets filled. Maybe it'll be interesting to see if we start to push lower and we do flush next week. It'll be interesting to see if the Russell holds 190 and makes a higher low. That would be very interesting. So I'll be keeping that on radar for sure if we do start to roll over next week. Anyways, Diamond here down 0.5%. So Diamond holding up really well. Trying to hold this 331 area. Doesn't look like it will before the close. Got about 15 minutes left, but it is holding up way better than the other indices. Again, high yield environment. We know what's going on with that. All right, Dow Transports. Again, holding up a little bit better. Potentially, this, it's kind of a, I just added this trend line in here. You could make a case there's a little bit of an inverse head and shoulders, but it is getting rejected right now. And, it hasn't triggered, so we won't entertain it just yet. But, if you do end up making a higher low, you could come up and trigger that pattern. So we'll keep that on radar. Jets. So we talked about this lately, being highly affected by fuel prices. This red bar high here, 18.95, that's going to be the level there. If you get above that, you can get right back up to gap fill around 20. So that's going to be your kind of near-term areas there. On the Jets, again, gap fill there. And then, of course, the lows are going to be important there on the Jets. 10-year yield, we mentioned that earlier. Finish at the highs. So let's look at the weekly here. Strong week there, obviously. And I told you guys, this red bar here, it looked furious, but this is just a pullback pattern. I didn't think we would take off just this quick, just yet. I still think there's a chance we could do some more backing and filling, but yields having a strong week, and you got to respect that. Same thing with the 30-year, making new highs here. So again, chance it pulls back a little bit more. I would love for it to pull back a little bit more so we can go along the TBT again. But again, strong week there for yields, and you got to respect that. All right, so Again, another reason, I mentioned this yesterday, why I think we possibly could have a little bit more backing and filling to do on yields is the home builders. Actually, this is kind of holding up okay, relatively speaking. Take a look at the spiders intraday here. And, home builders really haven't done a whole lot. And same thing with the VNQ. This is holding up okay. This is a pretty good reversal candle, but, it's holding this kind of upright pattern for now. And, it doesn't look terrible. So, these could be telling us something that yields maybe aren't quite ready to break out yet. But in any case, we'll continue to watch them. XLF was very strong earlier on today, but did roll over just like everything else. Broker dealers got a nice little, it's holding this green bar. You're still inside of that, so not the worst thing, but you are below all the moving averages now, and you did make lower lows, so we have to be careful with the broker dealers right now. JPM here. Coming back, giving back a lot of those gains. Bank of America actually looking okay here, but did finish negative on the day. Morgan Stanley also pulling back as well. XLE here, just really kind of choppy at the top. A lot of volatility at the top. And again, volume declining a little bit. This does look like this was distribution here, but it is, holding up for now. We won't make too much out of it. Need to see a little bit more of a pattern. Same thing with the XOP and the OIH, really. Kind of the same chart there, still inside of this big doji candle there. Let's take a look at crude. So we just dumped our SCO. We took a gain of just over 17%. It's about 17.5% on the SCO. It's a smaller position, but a nice gain anyway. The reason I dumped it is I don't like this look here. It looks like it wants to pop back up. Going into the weekend, I really like this 4-hour bear flag here. But going into the weekend, see that nice bearish pattern there. And you could make a case there's a head and shoulders here on the 4-hour. So that could play out. But over the weekend, it's holding up right now. It could start to bear flag next week, but over the weekend, who knows what the heck kind of news we're going to get. There's nothing to say this can't jump back up to 115, 120. So we just lock that gain in, and you can always reshort it if we get a nice bounce. But crude, hanging on to the lows here, and they did defend this kind of tail here from Wednesday. So crude's holding up for now. But came back very sharply this week, obviously. Let's look at the weekly candle here. Yeah, so pretty good reversal size candle there on the weekly. Really, really big reversal there. Anyways, nat gas continuing to hold up. Got that higher low in place. So, hey, maybe it makes a higher high now. Again, we talked about this bullish pattern, move up, little retrace, higher low. So maybe it can push up and make another run at 550. But as for right now, we'll just kind of leave it alone. It's not really doing a whole lot just yet. Dollar index strong again, so closed above that red bar high from Wednesday. Again, money just leaving Europe, going into the US. It is into a lot of resistance though up here. This is major, major resistance, and you are a little extended short term, so wouldn't surprise me if the dollar has to pull back or do some backhand filling, but dollar holding up really well here. Gold continuing to pull back. Nothing too major, just kind of two narrow bodied bars here in a row. We'll see if it gives us some type of a pattern. Same thing on silver. Another kind of hanging man, hammer candle, platinum, same kind of deal, pulling back, but holding that 20 moving average for now. And palladium pulling back a little bit, losing these tails here from yesterday, but this was really stretched out in the near term. And copper also pulling back a little bit. Let's take a look at the weekly there. So it looks like it's going to close back below that 463 area on spot copper. We'll continue to watch that. That could be a fake breakout there on spot copper price. All right. Bitcoin, nothing too, crazy to report here. You did get a nice pop Wednesday. Thursday kind of reversed it. Looks like you might lose that green bar low here, but I believe Bitcoin, this closes at 7 p.m. So we'll see what it does there. Again, you guys know the level. This green bar low, that holds. You're safe for the near term. One thing I will kind of say is that you do have sort of potentially a kind of wedge-ish pattern here on Bitcoin here. So maybe something like that. So that could be interesting to watch to see if we come up and maybe make a lower high. It could be telling you something. Maybe it wants to push lower. Again, that weekly time frame, we talked about this. Ultimately, right now, you do have a potential bullish inside bar, but you're also inside of a bigger bearish inside bar. So we'll see what happens with Bitcoin here. We'll see if it holds up into the weekend. Again, it is a leading indicator. I tell you guys that all the time. Look at Bitcoin, look at Tesla, look at IWM. They'll tell you a lot about where the market wants to go. Anyways, let's flip back over here to the spiders. All right, so it looks like they're going to hold that 420.76 area, or at least potentially, maybe they're going to try to. But market's selling off pretty sharply into the close. Look at the triple Qs there, just complete no bid right now. Semiconductors leading the charge lower. So yeah, pretty good beat down here. Let's take a look at the SMH again really fast. So 246.76. I'm just doing this right here. So this, you want to see it kind of hold that green bar low by the close. Otherwise, it'd be pretty good negative there for the semis going into the weekend. Anyways, we got the bid down. I think I explained everything pretty well. So we could get, another push lower, but I think your max downside here is 400 just based on the momentum and the strength of this level, the gap, the oversold condition, the fact you're going into the Fed, the fact that there's tons of puts, the VIX moving out of contango. In any case, we'll see what we get out here this weekend. We'll see what kind of news or what kind of BS the government can come up with and push the markets around. Anyways, guys, have a great weekend. Take care, and I'll talk to you all next week.